is the gold bull market dead? Well, what I'm hearing is maybe not dead, but perhaps in the ICU. So almost 110 tons of gold were sold from exchange-traded products last month. Here's why this mass liquidation was so scary. Those investors tend to be stickier, meaning they're in it for the long haul. So their quick exit raised many questions as to if there was a sea change in the market. The two culprits? Stocks and George Soros. Now, asset allocators are moving money into better performing assets in the advent of better economic data and no inflation, which gold, by the way, is a popular hedge against. And second, big name investors like George Soros sold shares in the GLD last quarter, and trend traders are following suit. Jeff Sika over at Sika Wealth Management is also worried that hedge funds like John Paulson's, which, by the way, is the largest holder of the GLD, are being forced to sell some of their positions as investors want their money back. And the result, Betty, has been absolutely devastating. For the first time in 8 quarters, ETF demand will actually be a negative for gold. Usually it helps to supplement weaker physical demand.
So what is next for prices?
Well, possibly a retest of 1525 among some technical analysts. UBS says a close below 1571, kind of where we're trading around right now, means there's space for fresh downside. Now, the good news for gold bugs, despite this mass liquidation in the ETFs, the gold price has actually stabilized, which means that there were buyers coming in on this dip. Also, gross short positions are at the highest level in 14 years, which means that any kind of good news, in gold's case, perhaps good news is bad news, could trigger a short covering rally for the safe haven asset. Basically, those traders now being forced to buy back those positions. Like I said, Betty, maybe not dead, but just in critical care.